Okay, it's Sunday and it's almost lunchtime here in Europe. I will go away from the computer today, believe it or not, but I wanted to give you some inputs how you can set a system for end of day checking. When you check the end of day, what has happened the day before and what will happen in the next few hours and so on. Because the market will repeat itself, it will follow mathematical rules and stuff like that. It do have some randomness, which makes people lose money most of the time, because when the randomness hit, no rules will actually work. And that's why it's actually a gambling market, because you can't beat randomness, but you can do a pretty good job with having a mindset and an education and experience that can actually make you control the market. You can't predict the market, but you can control the market. It's very important to understand. I will remove that one. Alright, so this is the cleanest chart that you can get. It's just Japanese candlesticks. So we are here right now. This is market closed right now. What you start to do is to find your next support and resistance levels. I doubt we have any resistance levels really. No, you say it's pretty much up here. That's the only one we have. So what you want to find now is the past resistances that now become support, because we are above the price, right? And there is an indicator that do this job pretty good for you, so you don't need to have to do this manually. Fractals, Bill Williams fractals. This is an indicator that you will have in your MetaTrader platform, and most platforms has it. Most charting packages has it. Basically, what it does, it points out the high and lows, and the high is when a center candlestick has two candlesticks to the left, two to the right, that are lower or equal to center candle high. And a low is the opposite. It's a center candle low, where it is two to the left and two to the right that are higher or equal to the center candle. Right? And so you see, that's pretty much what it's doing right now. So basically, when you're here, you should go to the next fractal, since we don't have any really on the upside. This one, of course, but you can put a line on the body there. But then we go for support levels. So this one, but I would go for the body. And you see here you have a confluence. You have two support levels. 1345. Check that tonight when the market opens. What will happen here? It will probably bounce and go sideways for a moment, and then try to break it. If it can break it, it will go up, right? And if this was the body line here that touched this wick, then we have a new one here. Remember to put it on the bodies, the top of the body, not the top of the wick. Gold has a tendency to always go and test the bodies exactly before it goes up, actually. And remember that if you're entering on such support resistance, that you must add spread to the entry level, which is normally can be anything, but for me it's 50 cents. So if you're entering here, you must enter 50 cents higher, for example. All right. So now you have one first support is here. Is this one? Second support is here. And third support is pretty much there. All right. You see, you have really an army of support in this area. Okay. So that's the first thing. Now you know, without checking any web pages, listening to forecasts or anything, this is your system. This is how you predict what the market is going to do. Right? That's the first thing. Now, I wanted to show you, I will remove all these lines so it doesn't get confusing. And I will remove the fractal, because after a while, your subconscious will see all these highs and lows. You don't need these fractals really, but in the beginning it's a good training steps. Okay. I like the Fibonacci tool. If you have seen my videos, you know that I'm doing that a lot together with trend lines. I won't go through trend lines right now because that's an art of itself. But if you look at Fibonacci, I mean, look at this one here. You see it goes up, goes down. It's A, B, and C wave, right? And here you have this one. This is a spiky one. I don't use them, but this one up to that one. See what happens? The market hit this 161.1 extension when it's waving, and that's because this is a 61.8 or lower retracement. It not always do that, but I mean, look at this. On the let me go back a little bit here. First, you did the support levels, right? So you had here, here, and here. This was your support levels, right? We can do it like this. So we do know what we're dealing with. Pretty much, these are levels I think you should really look for this Monday or Sunday. Okay, so don't bother too much what has happened here because it's over. But what you should bother about is the market currently is in an uptrend on a half hour or 30-minute chart. And as you know that the market follows the Fibonacci mathematical structure, you should really care about the waves that are not yet done. Alright, so you see up from here is A to B to C, a small retrace. I don't know what it is, 50%. Alright, if it's 50%, it should go to 161.8. So if you take this first wave, say, is it already over? It is. See, exactly where the market went, 161.8. All right, but that's just one Fibonacci wave, and it's really not strong enough for you to react on. Let's take the next wave, because as you can, this is an A, this is a B, and this is a C, and then it moves up again. Market is waving all the time. See? All right. So if you can see Friday that this wave and this wave has the same target up here. You see that there are two targets, but they are, I mean, look at this. You can't really say much about it. It's super strong support levels, 161.8 levels, right? And then it market engulfs down, bang down, right? So now basically what it can do, it may go up, test this high, or this high candle is not a high candle, before it's falling down to this one. And then we'll go up, test this one, before it falls to this one. That's how the market waves. And if you have control of the support and the resistance levels and understand how the waves are moving with the mathematical structure, with the Fibonacci, because all you can do is to check the latest waves. Which waves has already done the job, right? Let's say here's another wave for up. So it's up here. So potentially, right now, since we are in this A, B, C, potentially more likely is that you will go there than this, right? That's if it goes up. You don't know that yet, right? But what we do know is the market fell down right here. If it doesn't go up and start waving these smaller waves, we check this one. Right? Fibonacci retracement, which one will it take? 38, 50, 61.8, okay? Put a line. 31.8, is it likely? Well, that's actually 2 bounce levels. But I would say 50% is more likely because it's an old support and it's an old resistance. Right? So 1342.56, I would say 1343 then, right? Because the reason I want that one instead of 38.8, 38.2 is because when it bounced 38.12, the rule is that you cannot enter until it breaks the B point. And the B point in this case is this high here. Because when it touches 38.2, it will move very fast up to 161.8. So you really want 50 or 61.1 is the ultimate one. And why is it the ultimate one? I don't know if you have studied Fibonacci numbers, but they work pretty much like this. Oops. 8. Alright, this is Fibonacci numbers. 1 plus 1 becomes 2. 1 plus 2 becomes 3. 2 plus 3 becomes 5. 3 plus 5 becomes 8, right? Now, why 61.8 is so crucial, why it's the golden ratio, why it's working so well, why it's moving to 161.8 most of the times when it hits 61.8, is because if you take 8 divided by 5, 1.6, right? If you take 3 divided by 5, 3 divided by 5, 0.6. You see that this 6 number is coming up all the time. And I think you can 3 into you can do as well. Yeah, it's 50%. So basically from 3 and up, I mean the next number, what will it be? 13, right? So 13 divided by 8 is 1.62. Here's 61.8. So that's why the natural laws of mathematical calculations are this 1.68, sorry, but the 1.6 or 0.6. That's why it works so well when you do studies of mathematical structures. In pretty much anything, you can use Fibonacci. You just need to understand it. You can use Fibonacci time zones and retracement. When market go from here to here, it's a range of AB wave. Then it retraces, it fall back within the AB. But when it breaks the B and goes to the D, it only has A, B, C, D. It doesn't have E, F, and so on. It has 4 different letters. 1, 2, 3, 4, or A, B, C, D, right? And when it breaks the B point up here, it's called an extension, and an extension should go to D, and D should be 161.8 or 127, all right, depending on how much it retraces. Anything from here down to here, it should go to 161.8. But the 61.8 is the most solid to get 161.8 target. Because when they do 38 and 50, the randomness is higher than the actual logical. Okay? And when it goes lower than 61.8, 78.6, 88, which is the lowest retrace. Otherwise, the wave will turn around and then you will look for a down wave instead. And when I do that, it means market has slowed down mathematically, and now it shall only go to 127. If you watch this, you'll see it's very accurate. But Fibonacci levels alone is not something you can actually use. because then you can use pivot points or draw your support and resistance lines, right? But when there are confluences, when there are convergences, when the market do this wave and that wave have the same target almost, then you know, all right, chances it will turn on that level is huge. The more Fibonacci levels you have at one key point, the more likely it will fall. It can be a trend line bounce. It can be a candlestick formation plus Fibonacci. It can be past resistance plus Fibonacci plus trend line. The more reasons you have, the more likely you will be right in your trading. That's what differs actually, like binary bets from this world, because here you are not forced to follow a specific time interval, because when you have your setup, you can enter your trade, you can stay in the trade as long as you like, because market doesn't go directly to where you want it to. It has randomness inbuilt in. And what you see on a half hour doesn't mean people see on like 4 hour, weekly, monthly, and so on, of course. So you know never what you're up to or against up to. So you can only do your support resistance levels, check the waves, learn Fibonacci for God's sake. Because if you can't do Fibonacci together with trend lines and support and resistance, you're going to go a long journey to learn trading. The reason being is that Fibonacci levels, trend lines, and this wave system are used in Elliott theory waves, which is a very common way for professional traders to trade. It's like 3 waves up, and then 2 waves, corrective waves, and so on. And it's a very advanced system to learn, and I can say do much better job than actually this simpler system with just ABCD. And but many systems uses it, and it works. So if you're not using what other people are using, you will have less success, of course, in your trading. And my last word of wisdom is, do not use indicators. Okay? I know I will have a huge crowd against me with people that are not making money already, but don't use them, because this RSI, these stochastics, and all these indicators, they are driven by the price, right? Not versa. The oscillators doesn't drive the price drives the oscillators, right? Let me show you an example. Moving average, of course, that's the only thing you should use moving average is to find if it's in buy and sell zone, or if it has volume, right? Never use it for entry, exits, or anything. Again, I know there will be people that say, "Oh, you're wrong." All right, prove me wrong then. Over a 5-year period of time, show me that you're profitable with moving averages. No, you're not. Okay, so let's say we can take this one, RSI, okay, which is normally set to 14. It's a standard. Okay. You see it has a scale of 0 to 100, right? When it comes up to 100, or it actually doesn't do that, but when it comes up above like 75, 80, right, it will stay up here. Okay. And then it just needs a little retracement to boom down, and you will think, "Oh, I'm selling," but the market continue. Okay. If you were going to look at this one, say, "All right, I sell here." Okay, you sell, and okay, you make small profits here. And then it went up, you will be minus. And you see, this one is going down, and this one is going up. You can use it for what's called divergence, like when this is going up and this is going down, You know a fall is coming, but you don't know when. For that purpose, fine, it's working. But to follow the RSI, because it can only go to 100 and then it has to turn when the market actually continues to trend up. So it may work for a while until it doesn't. And then you get screwed, lose more money, and you realize indicators are crap, right? They were created to help people, but it's just confusing. The more indicators you have, I mean, there's a reason why the broker give you all the indicators and this platform for free. This is confusion, all right? And they want you to be confused because then they can steal your money. This is a war, remember that. This is not a social game. The broker wants to steal your money, even though he may be very nice to you because you know, all right, I'm going to take your money someday anyway, no matter what you do actually. If you use the indicators, if you don't have the knowledge, right? That's why they provide you with free short packages, free indicators, free everything, bonuses, high leverage and so on, because they want to steal your money. This is the same as a casino. The house has an edge, and that edge is going to kill you if you don't use money management and understand a method that works for you, of course. My method is trend lines, Fibonacci, ABCD waves. Right? I use also simpler method. If you've seen one of my videos, you know that I use simpler methods to enter smaller trades, to do I also do binary bets, but I don't do up and down bets. I do one touch and no touch bets. I have techniques for that, of course. I don't always use the ABCD and trend lines and stuff like that. But if I'm going to do like on a daily, this is a daily gold chart, right? What you know about it is that, you see, it's right now at 61.8. This was an uptrend until here, and then it went down, took out the support. So it's actually doing head and shoulder or king's crown or Libra pattern, whatever you want to call it. On a daily, traders on a daily, what they see right now is that if they get an indication on a low time frame that the gold has hit 61.8, you see, if Fibonacci said it was there, then when everybody is thinking buy, the market makers shortly will say, all right, now it's time to dump it. Where will we dump it? 1285.60. And I see people sit and say, oh, it's going to go to 1500 and 1800 in the future. Yeah, probably. But before that, it will dump down here. So if you buy the gold right now for going up to 1800, you must have quite a huge account. Right? And if you look at this is 161.8 in the downtrend. A, B, 61.8, C, which also confirms that the shoulders. This is the head, shoulder, right? But then you see this one doesn't have any really support, except this one here. But I really want to go to this one because it's 61.8. So I believe this one is more likely on this support. And then it's this support. I don't say it will fall there right now, but look at the daily. You didn't see this on 30 minutes. You didn't see this on 1 hour. But on the daily, many traders trade gold that trade daily, weekly, monthly. Let us take a look at the weekly. This is a weekly chart, and you can. I think the weekly chart is really hard to trade actually, because each candle in 1 week is really hard to see if you're an intraday trader. So where do we have here? Fibonacci again. Go here. It broke the 161.8 there, and then bam, right down. And now it's either it's going to wave because now this becomes resistance. I'm just going to wave up there, and then fall down to this one. And what this one is, I mean, these are amounts away. 11.99. You may have to remember 11.99 as a huge support level. It may go there, because you see, this is a head, this is a shoulder, right? Do you see it has been there? Will it go there? I can say it will. 1,093. Is it possible that gold will go there? Yeah, in the future it will. It will go down and test this one. But before that, it may go up. That's for sure. It may go up, but 1433. After that, it's up here, 1600. But it's not likely to go there right now, because the daily doesn't say that. And if the daily doesn't say that, the weekly probably will have to work out the daily first. And on the monthly chart, this is how you control the market. You know what is going on. Don't follow what everyone else is doing, because then they are sheep and you're the wolf, right? If you want to be the wolf, then you must follow the wolf rule. See this one? This is a monthly. It shows it has a lot more to do on the upside, but it really doesn't have any resistances. See that? This is actually the no, it's not the resistance here either. It's a very dangerous area right now. Yeah. Potentially, it just have done its job. It may go a little bit higher here. Remember, this is a monthly chart. 1393, falling back to 1181. I'll say it will go there, but what the charts tell me is more important than what people tell me in chats and web pages and forecast sites and so on, because I don't really care what people say there. And because when you sit and listen to 100 people saying, oh, it's going to go to 1800 or 1500 and the dollar is going to collapse and so on, it becomes a throat for you, right? Stop listening to other people. Get the education, get the knowledge how a chart works, what the chart is telling you, because the chart can only do what the chart tells you, right? You know it won't just drop right down and never come back up. You don't know it won't drop right and go straight up, never come down, right? That's not how it works. So remember my friend on the daily. People say, oh, it's going up, going up more, right? But really, is it? I mean, you will get the 61 point in every uptrend, of course, that it breaks and go further. But what supports this to go higher when it's look at this? Because if you understand visually with your eyes what is going on, you're going to do like this, because that's why I think it will actually go in the future. Yeah, pretty much there. And pretty much. Now when I draw this line, can you see this? I learned this when I was in MTI, which is Market Trading Institute, where I have my education. This is called a king's crown. You see how it looks like a crown of a king? But other calls it head, shoulder, or Libra. Libra pattern. You know the symbol for Libra? It looks like this almost. Or some people call it probably anything else. Butterfly or whatever. I mean, still the same thing. The market moves up. Falls back, and then this was A, B to C, and the C couldn't the C couldn't push it, or the C pushed it up. But then when this becomes an A to B, you expected the C to be around 61.8, but it couldn't hold. It fell back to the neckline, to this one, to the A. If this was A, this was B. I mean, you expect the next up wave to be around this area, right? It come here, but it fell. It fell down to its starting point. So it's no longer an uptrend. So then it falls back to this one, meaning this separates the uptrend and currently the downtrend. So now this becomes A, and this becomes B, alright? So now you must turn this ship around, adapt to the market, see what happens, A, B, C, hits 61.8, right? And it has almost a, I mean, you probably heard also about the M pattern. If you draw a line here, you'll see it looks like an M, okay? So if this is the way that we are working on right now, it's I don't know, there. Right? You see, we're not going to the 15 or 1800 right now. We are more likely to hit the 1286 or 1246 in a fall, or this one actually, 1250, whole numbers, 1250, 1225, 1200, and so on. But this is how it looks like. I mean, if you look at this, there's a support. It was never tested again, like here. It was tested again. It moves up, wave down, wave up. Here it was tested, but it was also a larger wave. So that's the tricky part. This can be a retracement of a larger wave, of course, because let me remove all this. While this is a head and shoulders for a turning point falling down, it's also, this is what makes trading really hard. It's also a bigger wave, but that bigger wave says we should go here, right? And I say this point is very critical for the future, because it has a confluence of this fall and the next wave. And you see on the daily that this wave was up here, right? And this wave, I don't know, it was up here. But the market turned around before that. So it may just now go up here and then try to make a new head and shoulder. But I can trade what may happen, but I can't trade what has happened. And what has happened is we have the head and shoulders. Right? This is the neckline. This is the shoulders. When the market went down here, traders know that the market will go up and test this B position, because this was A, B, C, up. It will test that one. Right? So these are the two levels that we need to keep track of: the neckline and the shoulders. Right? And you should also be aware about that many times this head and shoulders turnaround doesn't hold, because it has taken out a smaller support here, but doesn't have taken out this one. If this was a larger, because if the market goes down, I know this video becomes long, but I hope you learn a lot from it. If the market goes down here, right? So if this one falls, right there. Let's say this was down already. Then this is a larger head and shoulders, where the neckline will be this, right? And the shoulders will be this, or that one actually, but here. And it's more likely because you see you have all the resistance here and here. So then the market will move down to 1251, move up to 1312, and then move down to this area. But that's a prediction. I mean, the more waves that you try to predict that does not happen, the more likely it is not to happen, right? But currently, you know on the daily that, all right, we are in a head and shoulders. Let's check the 4 hour. What does the 4 hour says? All right, it looks like it's saying the same thing basically. I'm going to fall. On the 4 hour, as long as we stay above 61.8, you can be pretty sure it's a safe area to stay in your buy. But when it goes below, when it closes below this one, 1346 or so, I should really be careful. I should move my stop to below here, or depending on where I enter, right? Because this is a huge wave, and if it's going to, you know, when gold runs, it runs 1283 level here, old support, old resistance. Very careful what's happening this week, next week, and so on. Because everybody is thinking gold is going up, but I wouldn't say that's the reason, that's the case. Both 4 hour and daily says we are really not going just up. On 1 hour now, I mean, expect a new head and shoulder, 1330 maybe. Because you see, if this one is falling down, what do you have? A head, right? A head, a neckline, and where will it go? To this one, right? Yeah. Now I'm just predicting the future here. I know it's not very accurate, but this is how it could look like, right? This is 1 hour chart. You saw I started on the half an hour chart. This is a 1 hour chart, and you looked at 4 hour, you looked at daily, and everything says it has more probability to actually fall. So try to remove your mass psychology that you have got from forums, from chat and everything, that the gold is only going up. Because one person say, oh, it's going to $1,500 or $1,800 and the dollar is collapsing. Well, they said the stock market will collapse in 2016, that we will get a new depression, that everything goes shit. But the reason they are saying that is because they want a psychology and mentality on the market that you should think buy, because the big dogs, the wolves, will sell off when there is enough buying pressure. If you ever read about the market maker's method, you know that's exactly why these stock analysts go out in TV and media and says, all right, I think you should hold your stocks right now because sit tight in the boat or so on. When the stock market is falling like 5%. Sit tight. Of course they say sit tight because they don't want you to sell your stocks or whatever you have in your assets. Because if you do, they can't drop the market and make as much money as possible. That's how it works. I've been in this industry since 1995. In the beginning, I didn't believe in all people that was telling me this kind of thing, because I was using all different indicators and stuff and listening to forecast report. I paid for several forecast reports. I didn't have a clue what I was doing. And all the people that seems to be old people that was in this industry was boring because they really was always against everything I did. And the thing was, I was losing every time and they were winning, right? You don't have to listen to what I'm telling you, but you can save this video and you can check it out in the future. What actually happened? Was it anything of this true? Because if it's not true, then you can trade the market, because I just show you what the chart are telling us. Right? It's higher probability that this will happen than we will go much higher. it will more likely go up and hold below 1400 level. And it will mess around here. It will do spikes. It will spike down, up, spike up. That's how the market makers do it. They do it to make you think one way. So when there is enough volume, that when they trap enough traders, when there are billions in the market that goes buy, they say goodbye and drop it. And then your stops will just bang, bang, bang. And you will be out in the market. They make massive amount of money. And then when they have dropped the market, you will say, oh, wow, now I have to sell. I have to jump into the sell, right? And do you know what they do then? They correct it up, bang, right up, and take out the stops again. And then you say, oh, the market is random, and the market is crooked or whatever. I mean, that's how the big institutions work. That's how they trade. The banks and everything. I mean, they wait. Like here, they collect contracts so they can move up the market when you actually were thinking here, right? Or you may not be thinking that, but if you were trading technically, right? And just like A, B, C is falling, right? When they were happy, they shoot it right up, and the trader that was selling here, either they were stopped out or they're trapped. And it goes down, and they was like, all right, it's coming back. And the banks and institutions think, nah, we move it a little bit higher because now they know that you're killed within your trades. So understand this. The social media and the chats and everything, the groups that you're maybe part of, are part of this psychology game. Right? If enough people tell you to buy, you will buy. Right? But if you have the knowledge, if you have the think different. Remember that there's a platform called Think and Swim. That's pretty much what you should do. You either think or you will have to swim. And if there is a big ocean, you will probably not make it, right? Alright, a long video. I want you to really keep this video for the future. Because if you think that the market is only going to go up with gold because the dollar is collapsing and so on, think again. Look at the chart. Try to find the patterns I just showed you and start to control the market. You can't predict the market, but control the market. Don't listen to everyone else. Get into the game here. Get the knowledge. Get the experience. Control it. You must control your mind, because the mind will play a game with you if you don't. So do it right now, because that's the only way you're going to be a profitable trader. If you listen to all the people, because there were people saying buy, sell, they don't agree. That's why we have a market, right? But if you know that, all right, the weekly says sell, the daily says sell, the 1 hour says sell, but I'm going to buy. You need an answer what is probably going to happen? If you need, watch the video one more time. Bye for now.